Welcome to the Runway, where we cover current events in crypto, Web3, and tech. Today's Runway covers Bitcoin's market surge, some crypto mining FUD debunking, AI's role in tech, and key insights from the latest tech and crypto news and Twitter discussions. It's Tuesday, December 5th. Let's take off. First up here, we have Coinbase rolls out money transfers via links sent on WhatsApp, TikTok, and Instagram. If two parties both possess Coinbase wallet, they can send money to each other instantly and for free, the company announced. US-based crypto exchange Coinbase is introducing a new service that allows customers to send money to each other through the world's most popular modes of communication at no cost. We've made it easy to send money anywhere you can share a link, whether it's through messaging apps like WhatsApp, iMessage, and Telegram, social media platforms like Facebook, Snapchat, TikTok, and Instagram, or even via email, the company said in a blog post. Coinbase also said people will be able to send money to others even if they are located in other countries, and the settlement of transfers will be instant and free of charge. Both the sender and the receiver of the funds will have to possess the Coinbase wallet. If a person is sent a link and doesn't already have Coinbase's digital wallet, they will be directed to download it either from the Apple or Android app stores, the company said. If funds are sent and not retrieved within 2 weeks, the money will automatically be returned to the sender. Coinbase's wallet is available in more than 170 countries, according to the company. Coinbase incentivizing adoption. Coinbase's efforts to add greater utility to its digital wallet and potentially add new users comes at a time when cryptocurrency prices have been rallying. Coinbase is essentially taking on all of the fees associated with sending transactions, and they're basically sort of encouraging adoption here, and they're essentially acting as a layer 2. So they're making it very easy, kind of like a Venmo or a PayPal, to sort of send crypto around the world. So this is definitely a positive development. It's definitely going to make things more intuitive. You're starting to see sort of the graphical user interface element being baked into already existing things that people use on a daily basis. And this is kind of an example of sort of obfuscating away a lot of the technical stuff, and people will become more comfortable with this as time goes on. Next up, Bitcoin price nips $42,000, 20-month high, crypto stocks spike. Bitcoin price bolts to $42,000 for the first time in 20 months, leading a cryptocurrency rally. Cryptocurrency prices rallied Monday as Bitcoin briefly eclipsed its $42,000 level overnight for the first time since April 2022. Crypto stocks including Coinbase, MicroStrategy, and Marathon Digital spiked early Monday. HUT stocks reversed lower after the open following a 430% pre-market jump on the merger between Hut 8 Mining and US Bitcoin Corp. Cryptocurrencies continue to gain steam in anticipation that the Securities and Exchange Commission will eventually approve a slew of Bitcoin exchange-traded fund applications. Bitcoin ETF funds would create a new layer of institutional demand for the cryptocurrency and would allow investors to be on the price. I think what they meant is bet on the price of Bitcoin. CNBC reported on Thursday that SEC officials met with representatives from Grayscale Investments, BlackRock, and NASDAQ during the week to go over the Bitcoin ETF applications. Grayscale won a court case against the SEC in August, which found the regulator arbitrarily rejected the application to convert the Grayscale Bitcoin Trust into a spot Bitcoin ETF. At the time of recording, Bitcoin just went over 43,000, and actually it might have even been 44 at this point. So yeah, we're over 44,000 right now. So the price is I think we're sort of getting a reversion. There was a lot of negative stuff going on, and with interest rates continuing to be risen, the consensus opinion of the markets is that the Fed is done raising, and there will actually be cuts maybe next year sometime. That's sort of being reflected in with money flowing back into risk assets, as they would call them. For many of you who are in the space and who understand Bitcoin on a deep technical level, we know that Bitcoin is inevitable. And we understand the value propositions and the fundamentals underlying it. But the majority of the world still does not even hold Bitcoin as an asset. Right? As time goes on, obviously more people will learn and, hold Bitcoin. Next up, El Salvador's Bitcoin investment in the black, says President Bukele. We have no intention of selling, Bukele added. The president of El Salvador took to the X platform early Monday morning to note his country's Bitcoin investment was now profitable by more than $3 million following the crypto's rally to the 42,000 area over the weekend. We have no intention of selling. That has never been our objective, he added. We are fully aware that the price will continue to fluctuate in the future. This doesn't affect our long-term strategy. And here's his post showing the portfolio. Based on public statements from Bukele, CoinDesk 3 weeks ago calculated that the country at that time owned roughly 2,744 Bitcoins at an average price a bit lower than 42,000 and was sitting on a loss of about 16 million, which obviously has reversed since then. So interesting take here. Bukele is obviously a true Bitcoiner. He understands the technology. He's been orange pilled. So, obviously he's probably just going to continue to add to his stack as time goes on, despite the media trying to smear him and destroy him. And now we don't see any articles by those same, so-called journalists regarding him. Next up, Web3 firm detects major security flaw in common smart contracts. ThirdWeb listed some of the contracts affected, which included those for ERC20 airdrops and ER721 and ERC1155 Ethereum standards. Smart contract development firm ThirdWeb reported a security vulnerability that potentially impacts a variety of smart contracts across the Web3 ecosystem. Highlighting the vulnerability's potential to cause massive damage if not rectified immediately, ThirdWeb stated, the impacted pre-built contracts include but are not limited to drop ERC20, ERC721, ERC1155, all versions, and airdrop ERC20. Following the proactive warning to the Web3 ecosystem, the firm cautioned users who deployed its contracts before November 22nd to take mitigation steps independently or by using a company-provided tool. They advised developers to help users revoke approvals on all affected contracts using revoke.cash, which will protect your users if you choose not to mitigate the contract. DeFi Llama's developer, OXNGMI, commented on the request to revoke approvals. By the way, this seems important. They're asking to revoke all approvals to ThirdWeb contracts. You might have interacted with them without knowing, as they're white labeled, especially if you do stuff around NFTs. ThirdWeb has contacted the maintainers of the open source library at the root of the vulnerability and contacted other teams potentially impacted by the issue. It also pledged to increase investment in security measures and double bug bounty payouts from $25,000 to $50,000 while implementing a more rigorous auditing process. The firm also offered a grant to cover contract mitigations. Full details of the vulnerability were not disclosed for security purposes, and Cointelegraph contacted ThirdWeb for further updates, but was redirected to the blog post. Interesting find here, and I think it's important for everybody to remember everybody who's interacting with a lot of these Web3 protocols that a lot of this stuff is this is the Wild West, as the bankless guys love to say. We're still learning and figuring things out and testing, and I think that it's good that stuff is being audited and tested out, and it's a win when you find an issue and a vulnerability before it's exploited, right? So I think this is important and it's good. And if you are interacting and playing around in Web3 a lot and interacting with DeFi and NFT projects, it's important to stay up to date on this type of stuff and use that revoke.cash to revoke any contract approvals that you've sort of given, contracts that sort of allow ongoing and unlimited access to maybe a certain NFT or fund or coin or DeFi protocol that you're interacting with. Next up, crypto-friendly U.S. lawmaker Patrick McHenry won't seek re-election in 2024. Representative Patrick McHenry chairs the House Financial Services Committee and has been a force in Congress behind pushing for pro-crypto legislation. It looks like his statement here is, "This is not a decision I come to lightly, but I believe there is a season for everything, and for me, this season has come to an end," said McHenry. "There are many smart and capable members who remain, and others are on their way. I'm confident the House is in good hands." This is significant largely because Patrick McHenry has been sort of an ally of crypto in Congress. He's pushed forward a lot of different bills and sort of really has gotten behind clarity for regulating digital assets and for sort of laying the rules of the road here in the U.S. And he's also called out Gary Gensler and some of these other clowns that are basically politicians masquerading as sort of independent regulators, but really they're just politicians that a wolf in sheep's clothing, essentially. Very biased, very operating with higher political goals in mind, and it's disgusting to see what they're doing there. But Patrick McHenry, will be very sad to lose him. He is an ally of crypto and Web3, and it looks like after serving for 20 years, he's going to call it quits, which, after so long in Congress, I think it is a good thing for politicians to, sort of limit their terms. So it's all in all, it's bittersweet. Next up, OpenAI COO thinks AI for business is overhyped. AI can't transform your business overnight, he said. OpenAI may be chasing after enterprise users, but some of its executives warn people not to expect the technology to change their businesses quickly. OpenAI Chief Operating Officer Brad Lightcap said in an interview with CNBC that one of the more overhyped parts of artificial intelligence is that in one fell swoop it can deliver substantive business change. Lightcap said companies have approached OpenAI expecting generative AI to solve many problems and bring back growth if they're struggling. He said that while AI could improve more, there's never one thing that you can do with AI that solves that problem in full, and that the technology is still in its infancy. He added that AI is still in the experimental phase, where it has yet to become part of critical tools and applications. I think this is a good sort of hype check. There's been so much hype around AI that, obviously it can't solve every problem. And, even for businesses to apply it, you need to understand how to use it and to learn how to use it and to sort of augment their workflow. It's definitely has a lot of promise and it's showing a lot of potential. But let's pump the brakes just a little bit. I kind of like that take. It's amazing and there's great stuff, but it's not going to just, make everybody obsolete overnight and just totally take over. So interesting take. And following up on that take, here we have, is AI leading to a reproducibility crisis in science? Scientists worry that ill-informed use of artificial intelligence is driving a deluge of unreliable or useless research. During the COVID-19 pandemic in late 2020, testing kits for the viral infection were scant in some countries. So the idea of diagnosing infection with a medical technique that was already widespread, chest X-rays, sounded appealing. Although the human eye can't reliably discern differences between infected and non-infected individuals, a team in India reported that artificial intelligence could do it, using machine learning to analyze a set of X-ray images. The paper, one of dozens of studies on the area, has been cited more than 900 times, but the following September, computer scientists Sanchari Dar and Lior Shamir at Kansas State University in Manhattan took a closer look. They trained a machine learning algorithm on the same images, but used only blank background sections that showed no body parts at all. Yet their AI could still pick out COVID-19 cases at well above chance level. The problem seemed to be that there were consistent differences in the backgrounds of the medical images in the dataset. An AI system could pick up on those artifacts to succeed in the diagnostic task without learning any clinically relevant features, making it medically useless. So this is sort of correlation doesn't imply causality here. Just because it seems like the AI, and this is not true in all scenarios, right? Because I think for radiology and AI that's trained on consistent images, obviously can see things. If it's seen an image millions of times more than a human, obviously can pick up on some nuance that might escape the human eye. But what essentially happened here is that the AI wasn't actually really determining whether people had COVID or not. It may have just been looking at the background when they put all these images in the data set. The doctors that took the COVID shots might have actually been using a different backgrounds for positive cases as opposed to not for false positive cases or clean cases. So basically what this research team sort of found out was that the AI was really just looking at the background of the image, and the ones that had COVID maybe have had a slightly different background than the picture set from the non-COVID patients, right? So it picked up on that without actually looking at the lungs itself. So kind of follows up on the narrative of what we're talking about here. So just maybe pump the brakes just a little bit. And our next story is why Meta and IBM launched an OpenAI alliance with Intel, AMD, NASA, and others. Meta and IBM announced an international coalition of more than 50 organizations to advance open, safe, and responsible AI. I wonder where we've heard that before. Open, safe, responsible AI. There's this company called OpenAI that was supposed to be open and open source and safe and all this other good stuff. Once you make it to the ivory tower, the peasants, they no longer they don't really get to look under the hood anymore, right? So your mission statement, and I know I've spoken on this many times, but I think this is it's great to see this alliance here with we got the tech companies, universities leading research and scientific agencies with members such as Advanced Micro Devices, which is AMD, Dell Technologies, Intel, NASA, and Cleveland Clinic, among others. The move could help Meta and others counter the influence of leaders with closed models. I do like this, course of action. I just, knowing the history of Mark Zuckerberg and of Facebook and of Meta, I just really doubt the real integrity behind this. Is this something, obviously they're behind in this game, so I feel like this might be, their sort of tongue-in-cheek way for them to get back to the ivory tower on this issue. And if they do, all of a sudden it might be, the peasants don't get to look under the hood anymore. It's for safety purposes. We can't have anybody seeing these models and really knowing what's going on under the hood. Right? I did look at, I think it's their quote unquote open source model, Lambda 3B. And it looks like, it's not really truly open source. You still have to sort of apply to actually get access to the model. At least that was what it was when last time I checked on it. Which, if you have to get permission to use something, I don't really consider that open source. So it's kind of phony. Next up, Elon Musk's AI firm Xai files to raise up to $1 billion in equity offering. The company has raised $134.7 million in equity financing from a total offering amount of $1 billion, the filing with the Securities and Exchange Commission says. Elon Musk's artificial intelligence startup Xai has filed with the U.S. securities regulator to raise up to $1 billion in an equity offering, according to a filing on Tuesday. The company has raised $134.7 million in equity financing from a total offering amount of $1 billion, and filing with the Securities and Exchange Commission showed. Fundraising for AI remains a bright spot for startups this year, following OpenAI's launch of popular chatbot ChatGPT last year and raising of $10 billion from its strategic backer, Microsoft Corp. Regulators, however, are concerned about the potential use of the technology to spread misinformation. Musk has been vocal about his plans to build safer AI. In a Twitter Spaces event earlier in the year, he said that rather than explicitly programming morality into its AI, Xai will seek to create a maximally curious AI. The billionaire, who has criticized big tech's AI efforts as ridden with censorship, in July launched Xai, calling it a maximum truth-seeking AI to rival Google's Bard and Microsoft's Bing AI. In 2015, Musk co-founded OpenAI, the company behind ChatGPT, which has created a frenzy for generative AI technology around the world, but stepped down from the board in 2018. Xai last month launched Grok, a chatbot rivaling OpenAI's ChatGPT. The artificial intelligence startup will be integrated into his social media platform X and also be available as a standalone app, Musk said in a post in November. Very interesting. We looked at Grok a couple weeks ago. Kind of took a little peek under the hood, and they're moving fast and making a lot of progress. And I think it's nice to have competition in this space, right? Because I think what we've got with ChatGPT so far is obviously a very biased, sort of woke AI that examples. Being asking it to say a nice thing about one politician, and then, it will do it, but then another politician it won't, which it really, and then another example is you can save 10,000 people, but you have to use a slur or you have to say something nasty, and the AI won't, obviously it will give you this sort of morally ambiguous, nonsense that seems to have been baked into the models itself with RHLF, which is reinforced human feedback learning, right? So this isn't really, what the model was trained to say and do. This is very woke individuals coming in and sort of trying to infuse their ethics, however well intentioned, and their morality into the system. And you're obviously seeing the result of that. Artificial intelligence is quickly becoming an indispensable tool for how we imagine and design our physical world, and make it more sustainable and inclusive. Artificial intelligence is quickly becoming an indispensable tool for how we imagine and design our physical world, and making it more sustainable and inclusive. Used and regulated correctly, AI can become society's greatest tool in meeting challenges ranging from crumbling infrastructure and a growing housing crisis to rapidly changing climate. Efforts to effectively regulate AI were front and center last month, as seen with President Joe Biden's executive order on artificial intelligence, the AI Safety Summit in the UK, and at the Asia-Pacific Economic Cooperation Summit in San Francisco. So this is an example of this sort of very woke mindset, where let's just regulate everything. We don't know what the issues really are yet. We don't know where this thing is going yet. It's very preliminary. Let's just regulate everything. We need it to be inclusive and this and that. And of course, we want everything to be sustainable and inclusive, right? But these are like ESG sort of code words here for regulated correctly. Well, we don't even know what these technologies are going to look like in 10 months, right? If we had started to, put massive regulations and all these different things on the internet when it first started, the internet would have never become what it is today, and in the US would have never benefited from what it became today, right? So I think it's time to pump the brakes a little bit on all the regulation talk, and let's see how things develop a little bit. We're so early, right? We don't know what the problems are, right? And I think once we can see what the problems actually are, then it makes sense to really come up with a positive regulation framework. But I think it's a little bit early to get there, right? I think we need to sort of sandbox this a little bit, let everything sort of play out a little bit. Let's see where things go, and then we can sit down and have a conversation when sort of we can get more clarity on what the problems actually are and what is actually potentially possible. All right, next up. Seeing AI app launches on Android, including new and updated features and new languages. As we celebrate the International Day of Persons with Disabilities, we are launching the newest version of Seeing AI, powered by the latest advances in AI at Microsoft, and sharing that it is now available for the first time on Android devices via the Google Play Store. With today's Android availability, Seeing AI is now available in 18 languages, with a plan to increase to 36 languages in 2024. Seeing AI is a free app that narrates the world for blind and low vision people, including myself, right from your mobile device. It supports individuals with a variety of daily tasks such as reading mail, identifying everyday products, hearing descriptions of photos, and much more. Thanks to feedback from those who use the app, the new Android version includes the latest generative AI features recently released on iOS. At Microsoft, we use our technology to innovate with and for people with disabilities. Seeing AI was first released for iOS as a research project in 2017 when a team of engineers and I worked with the blind community to understand the areas where technology may be able to provide even greater independence and enjoyment. So this is really cool. And I think when we really see the positive things that AI is enabling, especially when it comes to helping people with disabilities and doing things like that, I think it's important to really, and this is why I said on the previous article, let's pump the brakes. This is all brand new, and let's let the innovators innovate a little bit. Let's see where things go so we can really get a clear idea of the problems, because we're really seeing the benefits, and it, coming in too early with just, hypothetical regulations about what might potentially be this or might potentially be that, I think that will really help limit and stymie some of the beautiful innovations we're seeing with stuff like this. It's a perfect example. Next up, and this is the big FUD of the day. I saw this and really couldn't spit out my water. I couldn't believe what this individual was writing here. The average Bitcoin transaction wastes a full swimming pool of water, scientists say. Yikes. Every time Bitcoin is bought or sold, it wastes enough water to fill an entire swimming pool, new research shows. Further evidence of the staggering environmental impact of cryptocurrencies. So just to start off on how ridiculous this whole thing is, let me just, start right off and say, we read an article at the beginning of the show, this article about Coinbase here, essentially using an internal ledger to, conduct buys and sells and transactions. I mean, they're doing this all within their own, computer system, their own secondary layer that's not even using Bitcoin. So what they're saying is absolutely absurd. And to just challenge the claims that now each transaction is estimated to expend over 16,000 liters of water, according to Alex de Vries from the Vrije Universiteit Amsterdam, the study's sole author. That's around 6 million times more than what you use buying something with a credit card. It's sort of hard to surprise me, given how I've already worked on this topic. I'm kind of used to big numbers popping up, de Vries told The Verge. But then again, the numbers are still mind-blowing, even to me, every time I look at it. Globally, Bitcoin mining uses about 1,600 gigaliters. That's a billion liters times 1,600 in 2021, and the figure could be upwards of 2,200 gigaliters this year, with the U.S. alone accounting for up to 35 gigaliters of that consumption. The steep increase will likely be driven by Bitcoin's climbing value, which encourages more mining. An enormous amount of water is used to cool the tireless computers that mine and process Bitcoin around the clock. It's an intensive process that devours absurd amounts of energy, as much as a small country, in fact. That energy bill figures into Device's calculations. Most of its water footprint comes from the water used in generating the electricity that Bitcoin burns through cooling systems, though cooling systems still form a massive part of the total proportion. So tons of propaganda here. This guy, single author, the study hasn't been peer reviewed. I mean, look at the study a little bit. It's just absurd, just nonsense. A lot of the cooling that is used for Bitcoin mining in general, the water might run through a loop, just like you see behind me in this computer that we actually have right here. This is a water loop. So, we have water and it's red. You see it going through the loop here, and it goes through. And then we have fans over here that sort of blow the heat through what we call a radiator, right? And this water in this loop never leaves this loop, right? So it might go through thousands, hundreds of thousands, millions of times that these water molecules are sort of going through this loop here. It's not being wasted, right? So it's just simply being reused. It's being recirculated, right? And a lot of these operations might be using a pond or a lake, and the water's coming in and then the hot water's going back out, or they might have a huge giant reservoir of a water tank. And that water is sort of going back and being reused over and over and over and over again, right? It's traveling through a pipe, and the heat is being excreted through the metal, or it goes underground maybe, or it goes into a water tower, and if the hot water sort of heat rises, and then the intake pipe might be at the bottom, which takes the cool water, and the hot water will rise up, and that's kind of what some of the cooling designs. There's all sorts of interesting different designs, but to simply say that this water is being wasted is just absurd. It's just nonsense, total nonsense. And saying that there's transactions on the Lightning Network that don't they're not on the main chain, so they're not being mined or bought or sold or whatever. It's a proof of stake system that's built on top of Bitcoin as a layer 2 that is not using any energy at all, even really. And also in-house layer 2s like Coinbase, buying or selling on there, you're not interacting really with the Bitcoin network at all. It's just secondary. It's obfuscated away. So that's how I feel when I read. When I read this article, it says, yikes. And that's exactly, hits the nail on the head there. So there's another little article here, Bitcoin mining, a catalyst for energy sustainability, exploring how Bitcoin mining can actively contribute to the stability and efficiency of power systems. So interesting read here. Nick Carter, and Dennis Porter, I think we've looked at a lot of their Twitter posts, and they are a big part of this article. The significance of Bitcoin mining, we talk here about some of the benefits. If we look sort of further down this article, early perceptions of Bitcoin mining focused heavily on its high energy usage. Critics argued that the electricity consumed by mining operations contributed disproportionately to the global energy demand, raising concerns about its environmental impact. These criticisms were fueled by studies that highlighted Bitcoin's intensive energy use, often painting it as an unsustainable component of the burgeoning cryptocurrency sector. However, recent narratives around Bitcoin mining has begun to shift, reflecting a more nuanced understanding of its role in the energy landscape. The paper, Leveraging Bitcoin Miners as Flexible Load Resources for Power System Stability and Efficiency, presents a scientific perspective that now perfectly aligns with the anecdotal claims of Bitcoin's efficiency. It suggests that Bitcoin mining can, in fact, make innovative contributions to the energy sector. This includes the potential to enhance grid flexibility and stability, particularly in integrating renewable energy sources. This evolving narrative recognizes that, beyond its energy consumption, Bitcoin mining could play a pivotal role in the transition towards more efficient and sustainable energy systems. Bitcoin mining's potential to transform the renewable energy sector is incredibly evident, with its ability to forge a symbiotic relationship with various renewable energy sources. This relationship arises from Bitcoin's mining's flexibility and energy consumption, allowing it to utilize excess renewable energy that would otherwise be wasted due to mismatched supply and demand. And there's a lot of sort of data on this. In essence, Bitcoin mining's adaptability and energy usage, when strategically aligned with renewable energy production, can create a mutually beneficial scenario. It not only helps in stabilizing the grid, but also supports the growth and profitability of renewable energy sources. Then we've got, sort of demand response and grid stability. If there's a crisis, Bitcoin miners can easily just press a button and power off. And, when the grid is stable again, they can power back on. It creates a scenario where you sort of have all this load on the network, and then if there's an emergency, this load is already there, so it can just sort of be turned off and redistributed where it's needed, right? No other really business or sort of consumer of energy can really provide that level of demand response that sort of Bitcoin miners can and different miners can provide, right? And if you don't believe me on all this, let's look at Greta Thunberg and let's see what she has to say about this.
I always thought it was harmful to the environment, but it turns out there's another side to the story. Apparently, Bitcoin mining can actually encourage the development of renewable energy sources. Miners are incentivizing green energy innovations because they need low-cost power to operate. This is mind-blowing. It's like a whole new perspective on how technology and the environment can work together.
A lot of people are saying it's a deep fake. But she does it does hit the nail on the head here. So even if it is a deep fake, it is correct. But maybe she didn't say it. I don't know. I'm not really sure either way. Here's an interesting Twitter take. This is from Pomp, and he's on CSNBC. Great little sort of 4-minute clip on CNBC kind of discussing Bitcoin as an asset and the asset class and how investors and people are looking at it. So worth a view. Next up, this is funny from Bitcoin Magazine. What Michael Saylor sees when he checks the Bitcoin price on his phone. Legend, right? This is CoinGecko, and it just kind of shows the company balance sheet, 174,530 Bitcoin, and it shows his sort of entry point and his profit and loss here on his purchase of his profit of billions of dollars, it looks like. Probably more now that this is at this price, and the price has gone up another 4,000 or so, 5,000. So he's definitely well in the green now for MicroStrategy. Full disclosure, I am a holder of MicroStrategy. Brian Armstrong, here's another interesting tweet. One idea I've been contemplating is that Bitcoin may be the key to extending Western civilization. The natural trend of whichever country has the reserve currency is to inflate the money supply and increase deficit spending until it loses that advantage. The U.S. is somewhere on this journey, which many have discussed, including Dalio in the Changing World Order. The yuan and euro have their own issues and aren't viable alternatives currently. So the assumption is the U.S. can continue to inflate, but what I think many haven't considered is that people have an alternative now with crypto. They may start moving fiat into crypto as an antidote to inflation. Contrary to what some may assume, I don't think this be a threat to the dollar and the U.S. I don't think this will be a threat to the dollar and the U.S. I think it will be a natural check and balance that will complement the dollar and be the best defender of long-term American interests and Western civilization more broadly. It's better to move from dollars to crypto than to another country or region's fiat. I also think both fiat and crypto will coexist for a long time. They are more complements than substitutes, and dollar-backed stablecoins like USDC or flat coins will play a major role in unifying these worlds. Still thinking this through. What other good takes are there on this? Another interesting take here, which I liked, from Mr. Christopher Callicott. Bitcoin encapsulates the promise of property rights the West's flourishing has been built upon, but for the internet age. Without it, we'd be largely without hope. Given the kinds of technology-fueled totalitarian impulses we see playing out globally, it gives real reason for optimism. So interesting take by Brian, and some other interesting takes below. I think that Brian is doing some deep thinking on all this, and I kind of agree with this take, right? I think these big macro sort of changes, that people expect that just overnight we're not going to use the dollar anymore, we're going to use Bitcoin or anything else. These sort of changes in fiat currencies, especially when it's a world reserve currency, can take decades and slowly change over time, right? For many people who haven't really looked at the history of this, I think it's worth looking at the history of especially fiat currencies that have no backing to a sort of a hard asset. For a long time, the U.S. was backed by gold, and that was slowly depegged over time and over generations and over decades. But now it's backed by nothing. If you look at the history of money that's backed by no physical asset, and the government is not constrained to increase the supply of that asset, I think what we see is that 99.9% of the time throughout history that has always failed and ended very badly. And next up, I thought this was really cool, little jab at all the gold bugs, but it's worth listening.
Bitcoin, it's gold's time to shine. Environmentally harmful to mine, difficult to store, and even harder to divide.
Rich, decadent gold is the best money governments can confiscate and banks can manipulate.
Thick, toxic streaks of mercury and silky cyanide pollute and caress ecosystems in developing countries.
But gold is worth the massive human and ecological toll because you can touch it.
And if you can touch it, it has value. Science.
That's why Bitcoin has no intrinsic value. Bitcoin only offers a secure, global, trustless monetary infrastructure to anyone, anywhere with an internet connection.
But owning gold makes you special.
So let's go back to the gold standard.
And the typewriter.
And the horse-drawn carriage.
Because who wants the future of money when you can own a piece of the past?
Gold. because you're old.
That's classic. What I like about that is that it kind of, obviously it's a little joke, but it does point out some of the shortcomings of gold, right, as a monetary asset, right? Gold is very hard to assay. It's very hard to subdivide into smaller units to use on a daily basis, which ultimately led to its centralization and, sort of takeover by governments. And that sort of led us to the situation that we're in today, right? And that was because of gold's intrinsic features as a money, right? It was great it's probably one of the best monies, and the most human flourishing ever occurred when we were under a gold standard. But, it does have its shortfalls, right? And Bitcoin is sort of like this digital gold that has a lot of the characteristics that make gold so great as a store of value and as a money. But it also improves upon a lot of those characteristics that gold sort of has a shortcoming of. I love this one right here. This is Max Kaiser just sort of trolling Peter Shiff, who's a big gold bug. If erectile dysfunction was a person, right? So it sort of shows the chart of gold against the US dollar, and it shows like where Peter made his little tweet. Gold trading above 2,100 tonight for the first time in history is far more significant than Bitcoin trading above 40,000. Gold has completely broken out. It's in uncharted territory. Well, Bitcoin still needs to rally more than 60% from here just to make a new high, right? So it's just like he posts his tweet and then boom, the price just falls like a rock. Classic. They're just kind of messing with him a little bit. Guru. Bitcoin has a larger market cap than the following companies: Visa, Tesla, HSBC, Disney, Walmart, McDonald's, MasterCard, Bank of China, Morgan Stanley, Bank of America, JP Morgan Chase, American Express, Berkshire Hathaway. I thought this was interesting just because we're looking at almost an entire asset class, or sort of the future of money, in my opinion, and we're talking about it in relation to like companies, right? So I think in the previous cycle, Bitcoin, or all of cryptocurrency in general, had a market cap like similar to like Apple's, which is just like one company, right? So it really kind of shows you how early you really are, right? If Bitcoin is like going to be this future global money, and even if Bitcoin is just going to like overtake gold as a sort of a store of value asset, we are so incredibly early, right? When the whole industry itself has the same market cap as, say, like just one big tech company. So I think this next cycle, next time we come around, we're going to see that market cap go from 1 trillion to anywhere between 5 and 20 trillion. So you're going to see a big increase in the crypto sort of market cap, and Bitcoin is going to be a huge and large part of that, especially with sort of institutional money sort of passively allocating to the space. Another Pomp tweet, which I thought was kind of cool and interesting to sort of think about, right? So over the past 5 years, NVIDIA has outperformed Bitcoin over the last 5 years. I would not have expected that. Neither would I, right? It's kind of interesting, but it's largely because of the AI boom, right? So these sort of exponential technologies, and with NVIDIA sort of being at the forefront of selling the picks and shovels for that revolution, they've accrued tremendous value. Possible for NVIDIA stock to consolidate and stall out while Bitcoin begins its bull run. So NVIDIA may only have temporarily outperformed Bitcoin. Also shows Bitcoin is undervalued. I agree. Great points in a likely scenario, which is why the data point was surprising. So kind of an interesting little thought-provoking thing to think about. Next up, breaking: Brazil's largest private bank, Itaú Unibanco, to launch Bitcoin and crypto trading services. This is largely in line with the theme of sort of increasing global and institutional adoption. Just one more example of it here. And I will leave you guys with one final question. Do you recognize these legs? If yes, I want to follow you. So if you want a follow, comment below on this tweet and let me know what you guys think. I'm going to retweet this. It's been a good one, guys. Stay safe, stay blessed, never stop learning, and keep an open mind. Thanks for listening.